Overnight, global markets have swung back into risk-on mode after the US and Iran announced a deal to end the war, with the Strait of Hormuz expected to reopen. The Financial Times reports a broad rally in stocks on the back of easing oil supply fears, and sentiment was also boosted by SpaceX's historic initial public offering. The BBC frames the agreement as ending a conflict that exposed the limits of US dominance, while analysis in the conversation argues the deal may leave Iran stronger than before and the US with less leverage in the region. The deal is already reshaping politics in the Middle East. The Financial Times reports Israel's Prime Minister Benjamin Netanyahu is facing domestic backlash over the agreement, including pressure to halt Israel's campaign across Lebanon. In Europe, Al Jazeera reports the EU remains divided on whether to sanction far-right Israeli Minister Itamar Ben-Gvir, underscoring how fractured European diplomacy remains on Israel-related measures. In the background, the global technology and AI policy environment is tightening. The Conversation reports the U.S. government has shut down Anthropic's latest Claude AI model via an export control directive affecting its Fable and Mythos models, a sign that AI regulation is moving quickly and unevenly, with national security and competitiveness now driving decisions as much as safety. For businesses and governments, this points to a more fragmented global AI landscape, with higher compliance risk and more abrupt policy shifts. Turning to Australia, the federal political focus is on how Canberra positions itself in the wake of the US-Iran deal. SBS reports Prime Minister Anthony Albanese has urged countries to use this opportunity as details emerge, with some nations signaling they could ease sanctions on Iran. The key watch today is whether Australia shifts its diplomatic posture or trade settings if sanctions regimes begin to loosen. On the domestic economy, the ABC reports expectations that a cooling economy and Iran's backdown will keep the Reserve Bank at bay as the board meets, with reduced global energy risk easing one inflation pressure point. Separately, the ABC reports the property market is shifting from urgency to caution, with buyers stepping back amid interest rate hikes, tax changes and global uncertainty. The near-term implication is softer demand and longer decision cycles, particularly for first-home buyers and investors. A major cost of living and infrastructure story is developing in energy. The ABC reports Transgrid is seeking to claw back a roughly $1 billion cost blowout on a major transmission line from consumers. Experts warn the regulator's decision will have far-reaching consequences because it will set expectations for who carries risk on large grid builds at a time when transmission investment is central to the energy transition. On public safety and the digital threat environment, SBS reports the AFB commissioner has warned of a growing trend of coercing children to harm themselves and others, ahead of meetings with global law enforcement. This is a material escalation in online harm, and it signals likely increased operational focus and potential policy moves around platforms, reporting and prevention. In corporate and markets news, the Sydney Morning Herald reports Lachlan Murdoch's Fox Corp is buying a streaming platform in a $31 billion deal, aiming to combine live news and sport with a large streaming audience. It's a significant consolidation move in the global streaming and media market, and it will be watched closely for competition and content distribution implications. That's the latest on the major developments to start the day.